So, you've got this pile of money, and you want to be smart with how you handle it, right? Here's our approach. Some of that money you should carve aside for emergencies, because, let's face it, we never know when the car might break down, or when you might need that emergency tonsillectomy, right? Next, we think you should set aside some of your money into something predictable. Perhaps an account or two that you can take income from for the next 5, 10, or 15 years. This is especially true if you're retired. If you're not in retirement, it might still be a good idea to have this kind of an account set up for when you do retire. Now, the question is, what to do with the rest of the money? We're firm believers that you should know the answer to a couple of important questions about your investment accounts. First, why do I own this? As in, what's the purpose for this investment? And what was the exact rationale as to why I purchased this particular stock, bond, mutual fund, or whatever? And the important second question, what is going to trigger a change? As in, when should I be doing something different? When should I sell the investment? What is my exit strategy? Our transparent process helps to answer those two questions. Think of our process like this. We put a bunch of stocks in the top of a funnel. We'll work with you to determine which stocks to start with. Perhaps it's the stocks that make up the S&P 500 or the Dow Jones Index. Or maybe it will be all the stocks on the US stock exchanges. From there, we apply strict criteria that each stock has to meet in order for us to own it. Some of this criteria may be based on technical analysis, which looks at the techie stuff on the stock charts like trends and momentum. Or some of the criteria may be based on fundamental analysis. This is more of the financial and accounting things like the company's profitability and revenue. So think of it like a final exam test to identify who passes and who fails. On any given investment portfolio, this could add up to dozens and dozens of required criteria that each stock must pass before it's allowed to enter your portfolio. At the end of this process, assuming the market conditions are favorable, we'll have narrowed it down to a smaller group of stocks. Now, if the market conditions aren't favorable, or not enough stock qualify, we'll consider investing in something else, depending on the formula. This might be ETFs or money markets. Here's the best part. We do all this unemotionally. We don't have some bigwig expert that gets a hunch on a stock and guesses. We only buy the investments that the formula tells us we should own. And at the beginning of each and every month, we repeat the process. This provides the confidence to you to know that each and every month your portfolio is being reviewed and rebalanced, unemotionally. Pretty cool, huh? So, how do you find out more? Well, we don't work with your local bank or some big warehouse on Wall Street. We work exclusively with independent local financial professionals right on Main Street. Chances are, there's one near you.